All right, guys. So, yeah, last week, sorry, on Monday, yeah, I told you guys that I was going to show you how I got this trade, how I got this particular trade over here. So, this trade over here, how I got this trade, and my strategy for trading, although it's simple, but most people think it's complex. So, I actually don't subscribe. I've been trying to subscribe for the pro version of TradingView, and then my cards have been declining. So, in case you know any card that will work for me, you can just like say it in the comment section, right? Okay, so just let me go back to time here. So this is the particular trade we're talking about, this place. So I'm going to mark this place here just for a little bit. Here, right? I didn't think I picked that, right? So excuse me. Yeah, I do watch cartoons, right? All right. So I'm going to mark this place here, right? And then mark the engine here, right? Okay. So apart from your normal supply and demand, what I also do to get into the market is I do divergence, right? So it's called divergence. I think I'm going to write it somewhere here. Yeah, divergence. Okay. All right. Good. So what this means is that sometimes the market is going to go in the other way, but there's a particular indicator that shows you that the market is going to go in another opposite direction. So it's just that simple. So let me just I'm putting this here to like demarcate, right? Like this was the time frame. This was when I got that trade, and now I got 3 to 1, 3 to 1 is to 3, 1 is to 5, and the other trades are available. So this is it here. So I took it from a 1 hour time frame, and if you can just uh, reduce it a little bit, you can see that on the 1 hour time frame, when the market got to this particular level that was supposed to be a demand. Yeah, it was supposed to be a demand here, right? There's a demand here. Demand level. Most people would have bought from here, right? Most people would have bought from here. But then if you look at the RSI, so the RSI is the tool that we use for divergence, right? So let me just I can show you my settings. Yeah, upper band is 50 and lower band is 50, and then the inputs just normal default settings, right? Alright, so and then if you look at this, the market was supposed to move up from here, right? At this particular demand here. But then it came down because the RSI was also coming down. So what divergence means is that it's doing the opposite of what the market is doing, right? So the market here was selling, if you can see, it was coming down here, looking like sell here. But then the divergence, so I'm going to like let me bring this up a little bit here around here. Let me bring out my trading. And the divergence, let me drop it here. Okay. Alright. Let me drop this. Yeah. No, it's okay. Okay. All right, so the market, so like there are two ways I open this here. I can just click here to get a full view of just this my normal chart using just price action and stuff, right? So I can get this full chart, and then I can just open only the divergence. So that's what I did here. I opened only the divergence, and if you see, that's why I demarcated the lines over there, right? So if you can see well on this particular place, the market was moving up, right? Market was it was in an uptrend here. It looks like an uptrend here, and on the chart it was taking like a downtrend, right? So this is an uptrend, typically uptrend. It's not be perfect. That's what divergence is, right? It's not going to be perfect. So this the market was going up here, and then you can see it now on the chart. The market was coming down, so that's what we call divergence, right? They're not doing the same things. So easy for you. You can catch a 1 is to 3 or a 1 is to 5 on it, right? So let me remove this. This was my previous trade. Let me just remove all this because I actually used to go to lower time frame to get entries. So let me go to the 15 minutes time frame and show you guys something. All right. Okay, so this was it, right? You can see market was coming down and on the RSI it was going up. So this would have been a perfect entry. You have to enter on the next candle after the bullish candle. So this would be a buy opportunity from this place here. And then your stop loss would be on the previous candle, right? But because I was doing it on a higher time frame, that's why you saw only 1:3. If I had taken the trade on like this 15 minutes time frame, and then my stop loss would be what cover the previous candle, like the first candle on the bull run, and then your take profit should be 1:2. This is 1:3, 1:2, and then from 1:2, yeah, and from 1:2 you can start increasing your take profit. So 1:3, then you just put your break even here, right? You put your break even here, and then you enter another trade maybe from here, and your stop loss will be on the previous one here, right? And then let me move it to the chart. So here, here, and your stop loss will be here, right? On this previous one. Let me zoom in. Right, so stop loss will be here. Over it, very good. And then you can continue moving up like that. So what 1:4, 1:5, to you just but usually I do 1:5 and I'm out of the market. Right. So that's how I got that trade. It's a very simple strategy. So let me just draw something here for you guys. This is how divergence work, right? So your charts will be something like this. That was a bullish divergence right there. On your chart, the market will be coming down like this, and then on your RSI, it will be doing the opposite, right? So just give me let's into this. So the on the it will be doing something like this. It will be moving like this, right? So most people tend to think it's like a down continuation of downtrend, but the RSI will confirm if it's a bullish run or not. And the RSI is also moving like this. So that's it. So when you see confluences like these, different confluences, it just means that the RSI is right, and then the market is going to go up to the bull run. And then the opposite is the same. When you see the opposite, let me say the market is buying, right? So I think I'll find an example for you in my next video. I don't want videos to be long. The market is buying, and then the RSI is selling, right? So the RSI will be something like this, and then it's selling. That's oh, it's a bearish run, and then the market is literally going to sell after this. So yeah, that's it for today. Stick on to the next video. Let me explain how the bearish divergence also work. All right, guys. Thanks.